Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing, ever smarter, faster, and stronger behind a wall of encrypted energy. Those are the words of our first guest, whose Bitcoin evangelism and aggressive company purchases of BTC have helped validate the narrative that institutions are entering the crypto market. Joining us now is MicroStrategy Chair and CEO Michael Saylor in Miami. Welcome, Michael.
Thanks for having me on your show.
Great to have you here. All right. So, Michael, MicroStrategy has spent over $2.1 billion to buy almost 91,000 BTC at an average price of 24,000. You tweeted. You also mentioned on Twitter this week your firm just bought another 15 million BTC. How much room does Bitcoin have left to rise, in your view?
Well, I think that the next logical thing to happen is for Bitcoin to replace gold, and that would take it up by about a factor of 10. Ultimately, my view is that the world needs a non-sovereign store of value, and the addressable market for a non-sovereign store of value is somewhere between $100 trillion and $250 trillion in today's dollars. So Bitcoin has quite a ways to go. It's the strongest asset class in the world, and monetary energy is going to flow into it.
Michael, last month we had economist and prominent Bitcoin critic Nouriel Roubini on the show. As CEO of MicroStrategy, he accused you of irresponsible behavior for converting your firm's cash reserves to Bitcoin, considering BTC's volatility. Just wanted to give you a chance to respond to that.
If you go and you look at the blue dollar rate in Argentina over the past 15 years, it started at being about 3.5 pesos to the dollar, and today it's 1,500 pesos to the blue dollar. It's not irresponsible for any corporate executive to convert a weaker asset into a stronger asset. And if you're sitting on top of $1 billion worth of cash or cash equivalents in the current monetary environment, the cost of capital is 25%. The yield on conventional treasury strategies like holding short-dated treasuries is nearly zero. That means you're running a minus 25% negative real yield. It's not irresponsible to avoid burning 25% of your shareholders' money every year. So I think that the challenge with the critics is they don't offer a constructive solution to the problem. The problem is $400 trillion worth of cash and cash derivatives and fiat derivative assets that are losing 25% of their value or something like that, and 7.8 billion people that are getting paid in fiat currency. So that's losing its value. So if you're going to be constructive in your criticism, you have to offer something to all those people and all those companies. I don't see the critics of Bitcoin offering a constructive solution.
Hi, Michael. Your company's liabilities, though, aren't in Bitcoin. They're in dollars. So why would you necessarily buy Bitcoin when you maybe could take care of some of your liabilities?
The cost of capital is approximately the S&P 500 return over the past 12 months, and you can see that number. It's about 25%. There's no investor on the planet that's willing to accept 0% return on their capital in the last 12 months. I could generate 25% return on capital in 30 seconds by simply sweeping all of my excess capital into an SPY ETF index. And likewise, the cost of capital is represented by the expansion of the M2 money supply. That's also 25%. If you're going to be a responsible custodian of shareholder capital, you're going to have to meet that hurdle rate. So, there's no investor on the planet that would stay in business if they went to all their limited partners and said, our intention is to generate 0% yield on all of your money for the next 12 months. So everybody knows it's ridiculous for an investor to invest all of their money into cash. And so to go to a CEO of a company that's a fiduciary responsible for the capital of their shareholders and say, yes, you should invest all of the shareholders' capital in a 0% yielding instrument that's going to lose 25% of its purchasing power for the next year. And every year I can see that's also equally ridiculous.
So just to clarify, what percentage of cash, roughly what percentage of cash is invested into the business itself as opposed to assets like Bitcoin?
Our company, first of all, our company generates cash, right? So we've been generating cash and expect to generate cash. We have about $50 million in working capital that we keep in local currencies like euros and dollars and yen and won. And our policy is to sweep all of our excess cash into Bitcoin.
So, Michael, before buying Bitcoin, MicroStrategy was worth about 1.3 billion. The company now owns about, let's say, 4.6 billion in Bitcoin. You took on 1.7 billion in debt to buy that Bitcoin. So that kind of leaves an extra about 50% of your market value, which is right now around 7 billion, is the difference between what the company was worth a few months ago and the Bitcoin less the debt. So what's that premium? What exactly is it that shareholders are buying? And isn't it an expensive way to get into Bitcoin when it essentially doubles well, maybe not doubles, but makes it about, let's say, $80,000 per Bitcoin to get in if they buy your shares? Shouldn't somebody potentially short your company, buy the Bitcoin, and wait for the premium to shrink?
First of all, I don't comment on the price of our stock. I think the price of the stock is set by the public market. But with regard to why someone would buy Bitcoin versus why they would buy a Bitcoin derivative, if you have billions of dollars in a tech equity fund and your limited partners have entrusted you with the billions of dollars and they've given you a charter, have a charter that allows you to buy publicly traded technology companies, you don't have the option to buy debt, nor do you have the option to buy Bitcoin. You have the option to buy publicly traded tech companies. And so if it happens that Bitcoin is appreciating this year more than 400% a year, and every year on average for the past decade, more than 200% a year, it makes sense to invest in a publicly traded tech company that has its balance sheet and an appreciating asset. That would be the best of your choices, and that's your universe of choices. It would take you, by the way, it would take you a year to change your charter and then to set up the custodial relationships and the trading relationships to buy the Bitcoin. And it's likely you'd lose all your limited partners as investors while you're doing it. It's not practical for a tech investment fund to buy Bitcoin. It is practical to buy a company that owns Bitcoin. Likewise, we have convertible debt that we've issued. If you run a convertible arbitrage fund and you've raised billions of dollars from pension funds and endowments that expect you to exercise or execute a convertible arbitrage strategy, you can't buy the straight equity. You have to buy the convertible debt, and then you're allowed to buy long or go short the equity. That's your strategy. If you have money locked up in a 401 plan, your financial advisor or your plan administrator won't let you buy Bitcoin. They won't let you buy convertible bonds either. They will let you buy a publicly traded equity. So I think the key to understanding these things is to understand that there are many, many, many pools of capital, all subject to different investment guidelines and charters, and capital is looking for the best return. I think the best return on a convertible bond last year was the MicroStrategy Convert, because it was a bond with exposure to Bitcoin, right? Likewise, if you're buying stocks like Square or PayPal or MicroStrategy, we have exposure to Bitcoin. So that would be a compelling thing if Bitcoin is a strong asset. And if you can buy the underlying Bitcoin, then that's a good idea too. But again, it's literally either it's impossible or impractical for many of these pools of capital to do it. And that explains why people are interested in companies with Bitcoin exposure in the public market.
Michael, I wonder.
But essentially, there's a like I said, there's about a $3 billion premium overall between the company and the Bitcoin you own, plus the public valuation of it, without commenting, of course, on what the public market values it.
I don't think. I think you can come to different opinions about what the premium is, but let's keep in mind The stock would be valued based upon the value of the underlying assets. It's based upon the expectation of the performance of the business intelligence company, which is an enterprise software company that generates substantial cash flow. It's also based upon your expectations of our execution of our Bitcoin strategy. Right. And our Bitcoin strategy is to acquire more Bitcoin either with equity or with debt or with free cash flows. So we were just able to go and borrow $1 billion, $50 million at 0% interest for 6 years and buy Bitcoin with it. And so that's an option we have, and it's possible that over time we'll be able to execute future options. And so you have to, if you're going to value the company, you have to crank in a lot of expectations, and everybody's welcome to make whatever assumptions they like. It's a free market.
But in your opinion, then, has your team, has your strategy trebled essentially the market value of the company prior to August of 2020? Has the execution strategy somehow trebled, quadrupled the value of the company just solely, just through magic, if you will? I mean, has it all of a sudden in those past 3 months created this incredible amount of value?
Bitcoin is not magic. Bitcoin is the world's first digital monetary.
I'm not saying it's not about it. No, I'm talking about the premium itself. It is the most important digital monetary network in the history of the world. It is not magic. Bitcoin is the apex monetary asset. If you want to look at MicroStrategy, you will find that our stock was trading about $120 a share before we embarked on this strategy. And it is trading wherever it is trading today, but substantially north of $120 a share. So I do think that our Bitcoin strategy has been a success, and I think that our shareholders view it as a success. I think that's quite evident, self-evident, if you simply look at the stock versus where it was a year ago before we embarked on a strategy of acquiring and holding Bitcoin.
Michael, I wonder if you view a scenario that Bitcoin could be eclipsed by another cryptocurrency.
Bitcoin is the dominant crypto asset network, and I think it's approximately 100 times larger in monetary value than the next closest thing, which would be like a Bitcoin Cash. It's $1 trillion digital monetary network. There's never in the history of the world been, by the way, it's the fastest growth to $1 trillion of any digital network. It got there in 12 years. It took Google 22 years. It took Amazon 24 years. It took Apple 42 years. It took Microsoft 44 years. So clearly, Bitcoin is a dominant network. It's got a network effect. The network effect isn't just Metcalfe's law. The network effect is Newton's law. It's $1 trillion of monetary energy on a network. So I think it's crossed the event horizon. I don't think it's that there's any other crypto asset network that is either technically suited to serve the role of a store of value for the entire civilization, nor do I think that anybody has any hope of catching it at this point. You can't clone it.
So just to follow up on that, would you ever invest in another cryptocurrency, say like Ether? And just quickly, I'm curious what your thoughts are on everything that's happening in the DeFi market.
I think it's quite clear that Bitcoin has been successful as a decentralized digital asset network. And I think it's clear that Bitcoin is a better store of value than gold, and it's a solution to every company's problem, every investor's problem, all 7.8 billion people's problem. I think it's $1 trillion of monetary energy telling you that's clear. My view on all the other crypto assets they're all ventures, and they all have interesting use cases. They have substantially more risk to all of them. Whereas Bitcoin is appropriate in a corporate treasury or an individual treasury because it's a better store of value than gold or sovereign debt. I think that the other assets are appropriate as venture capital investments. And if you have a venture capital portfolio, and if you can handle the risk and you can manage the complexities, then you could allocate to those.
Michael, you've captured the imagination of the crypto market. Thank you so much for joining us this morning and offering your insights.
Thank you for your time.